Well, good morning or good afternoon, everybody, depending on where you're from today. We've got people with us from Perth right across to New Zealand today. So it's fantastic to see so many people interested in getting better results with their service teams. So the reason we've invited you here today to talk about how you can get better results with your service teams is because selling labour or people's time is quite different to selling a tangible product, because if you fail to sell it, you never get that time back again to resell. So it's absolutely vital that we manage that as well as we can. So where you might be paying people a full-time wage, the question is, how many of those hours are you actually able to sell to customers? And if you can get better organised with managing the utilisation of that labour and recovery of that labour, the impact on your sales, profit and cash flow can be quite substantial.
I'll just quickly go through the agenda I'm going to look at today. I'm going to firstly look at what industries this sort of topic relates to. I'm going to look at key drivers. What are key drivers, which people often ask. Look at budget and the impact that these key drivers have on your profit. I'm going to look at the importance of setting targets for each of your key drivers, which come from your budget. I'm going to give some examples of reports which I do for a number of my clients, which hopefully you find interesting, and then finish off to look at a few strategies which you can maybe look at to optimise your labour utilisation or recovery. So firstly, what sort of industries does this relate to? And as Sue mentioned at the beginning, this topic really relates to any business that sells labour to its customers. And so it's going to relate to any sort of trades businesses. And a lot of these businesses are businesses I've worked with over the years. So could be electricians, plumbing business, mechanics, air conditioners. It's also relevant for professional service businesses. Example could be accountants, IT businesses, lawyers, engineering businesses, and also even health services businesses. Could be doctors, chiropractors, physios, vet clinics, etc. So as I mentioned, a lot of these I have worked with over the years, and it's just as relevant really for any of these businesses. Key drivers, what are they? Because people often ask that question, and really these are the things which will have the biggest impact on the financial performance of your business, either the success or failure of your business. These key drivers will vary from industry to industry and even from business to business. But for the sort of businesses that will be relevant for today's topic, the key drivers will be the ones which I'll just go through briefly now. First one is labour utilisation percentage. This essentially is the number of hours people spend on jobs divided by their number of available hours. So if you've got a guy who works for 40 hours for you and you pay them 40 hours and he spends 30 hours on jobs, then his utilisation is 30 over 40, which is 75%. The next key driver is the hourly charge out rates. What average rate do you get for the guys that are working on jobs? So again, that's the labour income divided by the number of hours invoiced. So again, if you invoice for 4 hours and you invoice $400, then it's simply $400 divided by 4, which is $100 per hour is your hourly charge out rate. Oops. The next one is your material margin percentage. So this is basically just the margin you get on the materials or parts that you sell on your jobs. Another one is what's the proportion of your material sales to your labour sales. And the last one, which again is an important one, is your labour recovery. So if you do a 10-hour job and you invoice the customer 8 hours, your recovery on that job is 80%. So they're the sort of key drivers we'll be looking at in today's session. Then what's the sensitivity or impact of these key drivers on your profit? And a couple of, I think, really good questions to ask yourself if you're running one of these businesses is what is the impact of any changes in these key drivers on your forecast profitability? And do you know the impact it's going to have on your profitability? And also, which key drivers have the biggest impact on your profitability? So I'm just going to quickly just show a brief example on Excel. So this is just an example of a sort of budget I might do for a services type business. Won't go into detail, but this is a $1.8 million turnover business, and it's got a projected profit of $152,000 or 8.4%. And that all looks quite nice. What I've done up here is shown if we increase the labour dollars average hourly charge out rate, what impact does that have? So if we do that up by 5%, you can see it increases the profit by $69,000. Same with the utilisation. If we increase that by 5%, it adds $69,000 to the profit. So this just allows, when I'm working with my clients, allows them to see the impact on their projected profit of any small changes to these key drivers. Recovery, if we get a 5% improvement recovery, again, 69. So these top three all have the same impact on your profit if we can improve it by 5%. Whereas if we improve that, the part sales and proportion of labour sales, it only has a fairly small impact, as does the parts margin. So it's very clear when I'm working with our clients that key things we really focus on are these top three drivers. I think what's also interesting is if these sort of drop down by, say, 4% each. So we have a 4% reduction in each of those top three, and suddenly that projected profit we have has been wiped out. And unless you're tracking this in your business, you probably wouldn't notice that 4% drop in each of those key drivers. And you probably wouldn't be aware of the impact it's having on your bottom line profitability, because the sales have gone from 1.8 to 1.6. So you're going to think, our guys are still busy, we're still generating lots of sales. Why aren't we making so much profit? And it's just small little changes up or down, as you can see, have a huge impact on your projected profitability, which is why it is so important to be setting targets and tracking how you're going on each of these key drivers during the month. And this is, again, just a little example. So if we get a 3% increase in each of those, so small little changes across the board can turn it from 8.4 to 14.5% business, which is makes a huge difference in the bottom line. When setting targets for key drivers, these are sort of, I think, questions you should be asking yourself as a business owner. So what do I need to be targeting for each of these key drivers for my business to be break even? What do I need to be achieving for each of those key drivers to hit my targeted profit level, whether it's 10% return or 15% return? Where do they need to be at? I think also ask yourself for these targets, are they realistic? If you're never invoiced out more than 400 hours in a month, and suddenly the target's 800 hours, that may not be realistic. So make sure they're realistic in terms of what you're setting as targets, and then also work out what actions do you need to do in your business to achieve these targets. I think it's also then really invaluable then on a weekly or monthly basis to measure your actual against your target to see how you're going. And where you're off target, then you can take immediate action in your business to address those areas where you're off target, look at the reasons why that's the case, and put actions in your place to address them immediately, rather than just letting it run and having a detrimental impact on your business. And I suppose the last question just ask yourself is, can you achieve the optimum best business performance you can without setting targets? Often people say, well, why do a budget? And but I think by doing the budget, as you can probably just quickly have worked out by now, it allows you to determine what you need to be targeting for your utilisation percentage. What do I need to be targeting for my recovery percentage? What do I need to be targeting for invoiced hours in a month? What do I need to be targeting for my average hourly rate? So without doing the budget, you won't know what you need to be targeting for each of the key drivers. And as we've got a hit there at the bottom, if you aim at nothing, you'll reach the target with amazing accuracy. I'm sure we've all heard that saying, and it is so true in business, which I'm sure you're probably aware of now. If you're don't set the targets, then you'll be leaving. I can tell you from experience, you'll be leaving profit on the table you're not aware of as a result. So now I'm just going to look at a few examples of reports that I've sort of done for a number of my clients over the years in each of these areas. So the first one is what I call just a labour scorecard. So first graph is just looking at the total number of hours spent on jobs, which is the orange column, against the blue line, which is the target. And then the second one is what is the actual labour utilisation of our team against a target, which is again the blue line. So again, these are I find for my clients just very, very simple graphs, but it shows my clients very, very easily if they are off target. It shows if it's trending upwards or downwards, and it allows them to see to see if it's off target. They can then address it immediately to sort of see, how do I get this on track? If your number of hours is below target, as it is in this month here, it's well down, or utilisation's down, then the sort of questions you can ask as a business owner is, do I have the right balance or right amount of productive staff in my team for the amount of work I have at the moment? Maybe I've got too many productive staff for the level of work I have at the moment, and maybe I need to address that. Also, maybe I need more sales. So the other side of the coin is, how do I generate more sales? How do I get more work for my team to get the utilised hours in percentage up to where it needs to be? So there's a few different discussion points you can have as an owner to address this immediately in your business. The next one I call is just looking at that recovery of hours on jobs. So again, this looks at how many invoiced hours, or how many hours I invoice to my clients each month against a target, and what percentage of my hours on jobs are being invoiced, that labour recovery percentage we mentioned earlier. And I think a really critical question for any owner is, am I recovering the hours my staff spends on jobs in the invoicing to the customers? For example, if a team member spends 10 hours on a job, am I invoicing 10 hours, or am I only invoicing 8 hours or 80%? And if I'm not invoicing all the hours, then need to look at the reasons why that is the case in your business. And it could be one of a number of reasons. Could be the job wasn't quoted well, might have quoted too low. It could be the staff on the job, maybe they're not properly trained, maybe they're just maybe you don't have quality staff, and therefore they take longer than what they should do. Maybe they weren't supervised well on the job. Could be, but if you're going over, we need to understand and identify those reasons why you're not recovering those hours. Because as you can see from that budget example, if that recovery percentage is off by even a few percent, the impact on your bottom line is significant. And it's really important this is understood and any reasons addressed immediately in your business. The next one is the average. What's the average hourly charge out rate we're getting for our team? We're getting an average of $100 per hour, 110, 120. And a question I often ask my clients is, when was the last time you put your rates up to your customers? The wages you're paying your guys are going up. And if your rates are not going up by at least the same percentage that your wages are going up, then your margins and your profitability are being squeezed. And I know a number of business owners I work with are reluctant to sometimes put their rates up because they're scared and fearful of losing customers. And the question is that yourself? And I think what I often say to my clients is, if you can, look at trying to do regular small increases, because you can do regular small increases. They're a lot easier to get through without being sort of noticed than suddenly doing a big increase after 3 years and not putting your rates up. The other great thing is when you put your rates up, when you can increase your average hourly charge out rate, is the impact on your bottom line is you can see is significant, and that's from doing no extra work at all in your business. So it's no extra jobs, no extra time on jobs. If you just get if you can increase that effective hourly rate, then you're getting an increased profit for the same level of work in your business, which is going to be a great help. Another couple of things I look at with my clients is getting that right mix of staff in your business, and also getting achieving that margin on your materials or parts on that part of if it's relevant to your business. When we do the budget, it will tell us from that, it will tell us what percentage of sales will our productive staff wages be running at to achieve our budget level of profitability. And when I look at the graph in here on the left, that is then the green line. So it could be, maybe our wages are running at, so it should be running at 27% of our income. And the great and the useful thing is when this is running more than that, that tells us that we've got more productive staff for the level of income that we have, and that's going to really hurt your profitability significantly. So either you got too many team, not enough work, or could be combination of both. So by looking at this with my clients, if the productive staff wages is too high, then we'll look at either how do we get more sales to bring that percentage down? Do we need to reduce the level of staffing to bring that down to where it should be? Do we need to change our overall business model? And on the material side, if we're not getting the margin we should be, do we need to put our rates up to our customers? Can we get better rates from our suppliers? So there's a whole lot of questions we should be asking ourselves to address that. So yeah, they're just an example of a few, and there's a number of other reports which I use as well. And the next thing is looking at strategies to optimize our labour utilisation. And I know a number of clients I've worked with, the owner says, well, the sales are sort of fluctuate. I don't know what they're going to be. They're seasonal, they're up and down. So how can I optimize my utilisation? How do I know what it's going to be or how many staff to have? But it's really important to have strategies and processes in place in your business to still manage this. Because if you have strategies and processes, then you can still achieve an optimum level of utilisation and the right balance of mix of staff. So if you are up and down, try to work out what mix of permanent, casuals, contractors, labour hire are you able to use in your business to give you that flexibility with your workforce. Also, at what point do you add a new permanent if your sales are sort of going up and up and up? But also if your sales are sort of coming backwards, at what point do you need to let someone go to make sure you still got that right mix of staff, the level of income? Do you have a pipeline of what work you've got coming up in your business? And to see if you've got enough work coming up against what you're targeting. And if you do a pipeline of what work you're coming up, you better say, do I have enough work? Do I need more work? If I need more work, how will I generate this in my business? And also looking at the pipeline help you to answer the question, do I need to maybe change the mix of my staff now ahead of when I get to that point where I see my workload's going to maybe jump up significantly or come down significantly? I mean, make changes now ahead of time rather than wait to when that happens. Maybe you need more marketing, more sales team to get those sales you need. So if you need to change your marketing plan or how you market, who does the sales work, then look at that as well. For a number of other businesses, a lot of your work might come from quotes. So if a big percentage of your work comes from quotes, I think it's really important to set targets for what quotes you're winning each month, because if that tails off, then you're not going to have that work in your pipeline to hit your budgeted targets. You might also need to look at your whole sales process for generating quotes through to winning quotes. Do you have the right sales process, the most effective sales process in your business? And this is just an example of a scorecard I do for a clients who do a lot of quote activity. And so again, through this, it's looking at the number and dollar value of quotes issued and also the number of dollar value of quotes won. The key thing is the bottom right one, where we're looking at the dollar value of quotes won, because if that is off target, then we need to address that, look at why. If you've got a sales rep on board who's responsible for this, this is a great tool which my clients use for the sales rep to set targets, review this with a sales rep to see if they're off target, what are the reasons, and how can we improve this? Or if it, whatever the case might be, or if it's going to be too hard, then maybe you need to change our way we market, the way we generate quotes, or who does it. But this whole quote activity, that's going to be paramount to achieving your figures going forward. And the last thing is looking at strategies to optimize your labour recovery. And there's a number of ways you can do this, but I'm just going to list just a few suggestions here. For jobs that you've completed, do you track how many hours it took against the number of quoted or budgeted hours on jobs? And for those jobs where it took more hours or was cost more than what you budgeted, again, what are the reasons why? And how do you address this in your business? And as I say, don't have surveyors knocking in pegs. So you don't have skilled people doing what unskilled people can do. You also might want to focus on the value you provide to the customers. And by focusing on that, you might find that you're able to invoice more hours or more time than what you actually spent on it, because you're focused on, look at this value I provided to you, Mr. Customer or Mrs. Customer, and therefore they'll be happy to pay for value because of what you've done to help them. So that might be a way to improve your recovery, improve your average hourly charge out rate. You might be training of team. How do you get more trained? How do you train your existing team? How do you recruit more qualified team, so you've got a good team who can get jobs done in the required time in your business, which is obviously key. So that's the end of my sort of presentation. So thank you very much again for listening. I hope, as I said at the beginning, there might be even one thing you've got from this which might help you. And I'm now going to sort of hand it back to Sue. Thank you.
That's great. Thanks, Scott. Yeah, some really useful information there about levers that you can pull in your business to have a really big impact on your outcomes. Scott, if you can just bring up the other bullet points there. I do have a couple of questions for you from our audience today. So the first question is, in your experience, Scott, what is a reasonable utilisation rate to aim for?
That's a very, very good question. There's no right or wrong answer. And that's why, to me, doing budget model is key, because it's working at what does that need to be at, so you achieve your to achieve it. So might be a 10%, 15% return on your bottom line. But yeah, but generally, I think you'd want to have at least 80% for your people who are on chargeable jobs. But it's also understanding from the business model what it needs to be at to make sure you make that profit.
Yeah, it's an interesting one, isn't it? I remember a client going back a few years ago. We worked that out for him, and his utilisation rate was only 50%. And he was absolutely horrified when he learnt that, because he hadn't been measuring it. So yeah, good answer.
Yeah, and it also varies from if you've got trained, you've got sort of qualified people, they might have a high utilisation recovery. Then you've got apprentices, they might have a low recovery, but you're still, so it's having that, looking at by position as well.
Yeah. Okay. And another question, are there tools that you would recommend for keeping track of this type of data?
Yeah, I know there's a number of reporting tools. I know of my clients have used packages like software like Arrowflow, Simpro, a couple of examples, which they then link into Xero counting. So they're and there's other examples of Workflow Max. So there's a number of different software which are really good for looking at capturing the hours spent, available hours, utilisation recovery, job performance, which link into your accounting software. Generally, clients use Xero, and having a good software package like one of those is really key to capturing that data. So that's really a really good point, sir.
Yeah, it might cost you $100 or a few $100 a month to subscribe to it, but the value you get from what it tells you just that cost pales into insignificance, doesn't it?
Oh, totally.
All right, one last question. On one of the slides there, you mentioned break even. Can you give us a little bit of information about what that means and why it's important?
I think break even's a point where you obviously sort of at nil profit in your business. And that's really important, because if you're obviously losing money, then you're going backwards with your cash, and obviously you're not going to be in business on an ongoing basis if you're losing money. So it's really important you're at least break even, at least holding ground, at least not going backwards in your business. And it's really important you know what you need to do to, as a minimum, break even, so your business can at least survive through the current time and be there to hopefully flourish when things improve, when sales pick up. So it's that point where you're sort of where you basically your sales equal your costs. And as I say to my clients, it can take a heck of a lot of work to break even. But once you've done that, you don't need to improve things much more, as you probably saw from my budget example, to then make nice levels of profit on your bottom line.
Yeah, it's a really great place to start with setting targets, isn't it? Okay, thanks, Scott. So thanks everyone for attending today. I hope you've learned something really useful that could make a big difference in your business if you're employing service staff. So if you'd like to chat with one of our CFOs about setting some targets and getting a good handle on those key drivers in your business, then if you'd just like to type yes into the chat box today, we'll be in touch with you to arrange that. And we'll also make available a recording of this webinar. So, we realise it's a bit to take in if you're not used to thinking about that sort of information. So we'll make that available to you afterwards to go through more slowly by yourself. And Scott, if you wouldn't mind just putting it on to the next slide, just so that I can tell you about the next webinar that we'll be having, which is all about managing the finances in a high growth business. So, we're starting to get some of our freedoms back now, and business is starting to feel a little more confident about the situation. So I think we're going to see a bit of ramping up going on with certain types of businesses. And with that can come a bit of stress, as in, not having everything under control and not having the working capital that you need to achieve your higher growth sales. So there are ways that you can overcome some of those issues. And Andrew Free, another one of our fantastic CFOs, is going to share with us some of his experience at working with some really high growth businesses. So, so thank you, Scott, again for sharing that fabulous information with us. That is so valuable and so useful. And hope you've all enjoyed it and got some use out of it, and hope we get to see you at the next webinar soon. Thanks, everyone. Have a great day.